Assalamu alaikum wa rahmatullahi wa barakatuh. Good day, everyone. My name is Mbemba Baji. I am a master student in the accounting department. Here is my thesis proposal on the topic Synergistic Hybrid-Ensemble Model for predicting financial distress. Every year, corporate failure costs stakeholders millions of dollars. And the difference between a thriving firm and a catastrophic loss often comes down to one main thing: a model's ability to accurately predict distress. In this proposal, I am presenting a novel solution to solve this precision problem: a synergistic hybrid ensemble model for predicting financial distress. The inadequate means to predict the creditworthiness and potential financial distress of firms, to discriminate between a good debtor and a bad debtor, is a deteriorating factor in financial institutions providing financial facilities and other stakeholders alike. The Altman Z-score model has been the pioneering financial prediction model, which have been used and referenced by a lot of researchers in the financial prediction field. However, despite the advancement in artificial intelligence and machine learning, the existing models still suffer significant limitations. Current models often attempt to adapt to the dynamic financial data despite its complexity and heterogeneous nature, and also strict legal definition of bankruptcy, which may not fully reflect the underlying economic reality of a company failure. Also, traditional models often exclude significant macroeconomic factors and qualitative factors that can significantly impact corporate failure or financial distress. For this reason, prediction accuracy has been stagnant for decades, primarily due to two main factors: data imbalance. This is because there are far more healthy companies than distressed companies, and also the homogeneous nature of financial ratios. So the missing piece here is existing models often fail to capture the crucial underlying economic reality, which may impact corporate failure. In short, failing to identify a distressed firm has catastrophic consequences for banks and investors. We need a model that are more robust and can adapt to economic changes. This study would enhance the prediction accuracy by incorporating economic conditions with traditional financial ratios, and also improve the recall rates for distressed firms, which is crucial in financial analysis, by introducing the synthetic minority oversampling technique to handle class imbalance. This study will not use a single model, but a synergistic combination of advanced bagging and boosting techniques, example random forest, XGBoost, and multi-layer perceptron, to significantly increase the prediction power and reliability. This study proposes that this advanced architecture will yield significantly superior prediction accuracy and robustness compared to any single base model, thereby addressing the existing difficulty in specifying independent methods for financial prediction. The study also fills a critical gap by incorporating macroeconomic conditions alongside conventional financial ratios to significantly increase the explanatory and predictive power of financial distress. So to cater for this problem, this study expects to demonstrate that the synergistic hybrid ensemble model, combined with macroeconomic variables, offers a superior framework for financial distress prediction, pushing the boundaries of current machine learning research in finance. Traditional models primarily rely on statistical methods, such as MDA, and logistic regression to identify companies at risk. The key issue with this method is they have very limited validation for these models. So AI and machine learning emerged to bypass the restrictive assumptions of traditional statistical methods and enhance predictive accuracy. They are more resilient to outliers and noises and often yield higher predictive power than traditional models. Ensemble methods address the constraints and deficiency of singular AI and machine learning algorithms. And based on researches, small minority oversampling technique is employed to solve the problem of class imbalance, which is a major challenge for many machine learning models that have been used in the literature. The technique oversamples the minority class to create a more balanced and high-quality dataset, leading to a significant enhancement in performance metrics. This study addresses the fundamental weakness of traditional models by advocating for the inclusion of external dynamic factors that could affect financial distress. That being said, this research identified three hypotheses. Hypothesis 1 posits that the hybrid ensemble model combining base learners yields significantly higher predictive accuracy and robustness for financial distress than any individual base learners. Hypothesis 2 states that macroeconomic variables and traditional financial ratios significantly improve the predictive performance of financial distress models. And hypothesis 3 states that the application of SMOTI to handle class imbalance improves the recall rate of distressed firms compared to models without class rebalance. This study will utilize dataset comprising company-level financial statements and economic indicators between 2010 to 2023. The sample includes 40 companies from USA and China that experience financial distress within the specified period, and these distressed companies would be matched with 40 other non-distressed companies, that is, healthy companies, and the economic indicators would be aligned with the year periods of each of the companies. So to predict the future health of a company and eradicate accuracy biases, the testing period starts 4 years before the actual distress happens. That means we are going to have 5 years of financial data for each company. The target variable is binary coded. Non-distressed companies are coded as 0 and distressed companies are coded as 1. A total of 14 features will be selected based on previous researches. 6 features will be selected from Altman 1968. 4 features will be selected from Dazelas and Rigani 2024, and 4 other features will be selected from Barbosa et al. 2017. Looking at the model design, 3 key models were identified based on previous researches: random forest, XGBoost, and multi-layer perceptron. These models were identified because from previous researches, they produced better accuracy and higher performance. So each of these models will be fine-tuned using a grid search CV, and a 5-fold cross-validation will be applied to identify the best hyperparameters. So all these base learners will be combined using a stacking method to leverage the strengths of the 3 individual base learners. And within the stacking method too, there will be a 5-fold cross-validation to be run in order to intensively train the meta-learner. And also, the synthetic minority oversampling technique will be introduced to improve the recall rate and handle class imbalance. This research moves beyond the limitation of static financial analysis. By integrating the power of hybrid ensemble machine learning with crucial macroeconomic variables, I am creating a prediction framework that is not just more accurate but truly robust against real-world economic shocks, tested across the world's two largest economies, the US and China. The findings will provide policymakers and financial institutions with a critical tool for risk management in the 21st century. Thank you for watching. I welcome any suggestions and I look forward to sharing the final results of this paper. Thank you.